I'm joined by Charles Taerk, Portfolio Manager for the Ninepoint Alternative Health ETF, ticker NAHF. Charles, welcome and thank you for joining us.
Thank you, Eric. Thanks for having me on.
Absolute pleasure. You're a well-known commodity in the space, Charles, and perhaps a man who doesn't need an introduction, but I thought it'd be good for our newer audience in the crowd, maybe quick showcase and bio on you, the work you've been doing, and in particular with the Ninepoint team.
Sure. Great. Thanks. Faircourt Asset Management is the sub-advisor to the Ninepoint Alternative Health Fund and now ETF. We launched the fund back in March of 2017. So we were the first group to launch a cannabis-focused investment vehicle in Canada. And from the very beginning, we just saw a huge growth opportunity and felt that being early into the opportunity provided the biggest area of growth. And we see that growth continuing up until to today and over the next decades to come. So there's lots of great investment opportunity. And just a little bit background on Faircourt, we've been around since 2002. And throughout our history, our goal has been to create unique value-added investment solutions for Canadian retail investors. And so we've been credited a few times since early 2000s with a few innovations, and 2017 was our latest. So great to be here. Great to talk about the cannabis sector and the healthcare sector. We think both areas are really experiencing that dynamic, the reopening of the economy that investors are looking for.
I love it. Well, we're grateful to have you, and actually great to be with one of the originals in the space as well, and an important nugget to remember, just given the early start and long-term thesis on the space. Now, obviously, when we booked the webinar to chat today, I think we were looking for a bit more of a broader macro update, but maybe first and foremost, since we had some hot news out yesterday out of the U.S. with Governor Cuomo's resignation. Curious to get a bit your thoughts, top line headlines on how that may impact the broader market before we dig into the mandate itself. Sure. and kind of explore other opportunities.
It's very positive because Governor Cuomo was not a big proponent of cannabis legislation. Really, he didn't have the votes to deny that vote that took place in the state Congress in Albany in the spring. So he begrudgingly went along with it. The woman who is taking over as the interim governor until his term ends is more supportive. And I saw a tweet this morning that you get the sense that some of the backlog in bringing forward a couple of the pieces of legislation, which are going to be really important. One is there's been a bill sitting on his desk for a number of months allowing flower to be sold. That's within the medical market. And if we consider what happened in Florida when flower was brought on, it's huge. But then secondly is bringing the necessary pieces together to launch adult use next year. So I think a very positive momentum change.
Brilliant. It's good to hear, and something fresh and obviously untimed from our perspective on getting some of that news out, but it'll be interesting to see how the market reacts and responds to it as that news makes its way through. Outside of New York, kind of unpacking the cannabis cover story, it's been a pretty interesting 3 or 4 months, I would say, as safe banking starts to get tabled and a few other legislative mandates start making some progress. Can you give us a bit of a macro framework on kind of where the U.S. stands right now? I've always known you've been a proponent of it, but how does that kind of fit for you vis-a-vis Canada as well?
Yeah, so I'll tell you, we can do this over 2 hours because there's a lot. I make fun of the fact that Doug Watterson and I, we co-manage the fund, and it's 4.5 years that we've been managing the fund. But in normal portfolio management, it's like 20 years, 30 years, because there's just been so much activity, so much change. From the regulatory standpoint, Canada is done. It's federally legal since 2018. And then, the edibles and 2.0 products hit the market in 2019. The US market continues to grow significantly. and very different. I think one of the messages that I would leave today for your watchers, your viewers, is the Canadian market is completely different from what is taking place in the US, not just from a regulatory perspective, but the market dynamics. And so we see great growth in the US as the state by state transition from medical use to adult use continues to take hold. And that's really, a key lesson is that federal legislation is not important for the market to continue to grow, because state by state, new markets are opening. I mean, we were mentioning New York at the beginning. New York is one of the largest states in the US. And when you look at consumption patterns in the more mature markets, one state, the state of New York, could represent equal or more than the sales that is being generated in all of Canada.
Wow.
Well, given the amount of tourism, given the consumption opportunities, and then given the licensing that they're looking at, it's a $4 to $8 billion market. So very excited at the prospects for the US. This year, since January, we all know the Senate runoff with Georgia, putting the Senate in the hands of the Democrats. I think that investors were very excited and a little impatient at, cannabis legislation is going to be done in a month. But it doesn't work that way in the Senate. And we all have to remember that the biggest issue right now is COVID. And the second largest issue is the economy. So the Senate is working through its priorities. But again, regardless of the federal legislative process and however long that takes, it's not if, but when. So looking at the state by state progress since the beginning of the year, Arizona started adult use sales early this year. New Jersey is going to be starting early next year, or maybe even in Q4. And then you look at the states that have legalized this year: Connecticut, New York, Virginia, New Mexico. I could go on and on. Obviously, there's a long list, but 19 states that are now adult use. So if we keep in mind as Canadians, everything's 10 to 1. We have 37 million people. They have over 300 million people. The consumption patterns are different. The demand is immense.
It's a great point to keep reminding Canadian investors about, and I'm obviously getting the distinct impression, obviously the fund itself and likely your own investment thesis, heavy focus on the U.S. opportunity. How are you stacking the two countries up and opportunities together? Where do you see the window?
Yeah, so yes, the impression that I'm leaving you with is overwhelmingly focused on the U.S. opportunity, U.S. market. We do invest in the Canadian names, absolutely, but we are a little bit more selective. The Canadian companies, the most recognized, the largest Canadian companies have really been losing traction in the marketplace. They've been focused on, reduced headcount, reduced cultivation, very much focusing inward, trying to fix operations. They're still not generating positive cash flow, and sales have become stagnant. There's a second tier of companies, though. I don't mean to call them second tier, but it's the ones that are less recognized. And those companies are cost effective, they're operating properly, lower costs, and they're gaining market share because even though there has been a SKU rationalization at the provincial level, the provincial distributors are reducing the number of lines that they take because some products just aren't selling. These new companies are gaining market share at the expense of the Cuomoses, the Canopies, the Tilrays, because they just aren't able to compete effectively. And price is a big determinant in this country. So you've got to be the low-cost operator. So our focus in Canada is being selective, looking for the low-cost operators. And we've been looking at those companies lately doing quite well, gaining market share.
Interesting indeed. And maybe, tying that all together back into the mandate itself and thinking about what the investors are likely looking for now.
Yeah.
What's on the radar? What change should investors be looking at next? You mentioned, folks may have priced in things a little bit too aggressively a few months back. Where do you think we should be looking right now, given you've got your eye on pretty much everything?
Sure. So many of the companies, both in Canada and the US, have come out recently, and this week especially, coming out with their quarterly earnings, quarterly financials. And what we've seen is, as I said a minute ago, many of the Canadian companies are struggling financially, continuing to promote a narrative that suggests that they'll be easily able to enter the United States when that happens. But they're going to need to raise a lot of capital, and they're going to need to build brands, and they're going to need to make an acquisition to get into the US market. Conversely, the US companies are coming out with quarterly financials that show double-digit quarter-over-quarter revenue growth and double-digit quarter-over-quarter cash flow growth, positive cash flow growth. So these companies are really in completely different areas. The US companies, cash flow positive, EBITDA positive, and growing, and continuing to reach better scale as they reach new markets, whereas the Canadians aren't able to do that. And so the conundrum we find ourselves in is fundamentally US companies much stronger, but they trade at a fraction of the valuation. And that has to do with listing. As a result, that US companies are not federally legal, so they can't list on NASDAQ or New York. And so many investors take that lack of liquidity as we don't want to be there. But when you look at the US companies, you see some very strong, very dynamic, growth-oriented businesses, which are going to be the leaders of tomorrow.
They've got a tremendous head start, into your point, building distribution of business and actually a very profitable one in the interim, which will be difficult to break open for a company oriented just north of the border, at least to start.
Sure.
Interesting. And a good lens for investors, obviously, to keep in mind. Interestingly as well, and also hitting headlines over the last few weeks, we've actually seen a few companies not in the cannabis space starting to lend their support, their voice, and credibility towards legalization. I think some of the most recent ones with Amazon.com and a few others. Does this have an impact? Does it mean anything? Should we be reacting? Where do you see that playing a role?
I think it's actually more meaningful than what goes on in Washington alone. Is when you start to get pressure from big business, that suggesting that the federal government is dysfunctional and needs to create laws that embrace employment, not just helping big business, but you're getting large employers like Uber, Walmart, and Amazon to lobby the federal government in the United States to tell them it's unfair to their employees. And it's important to get rid of some of these archaic laws. So when you couple the momentum that's taking place in corporate America with new lobby groups and the proposals that are going on in the Senate, there's one lobby group that recently came out called the Cannabis Freedom Alliance. This is a group of people that you wouldn't necessarily see at the same party, but they're in the same alliance. So this is Charles Taerk, who is, a multi-billionaire Republican supporter, teams up with Snoop Dogg and Weldon Angelos. And Weldon is a very famous civil rights activist. You put those three men together to lead an alliance that is lobbying the federal government for appropriate legalization. Then you add Senator Schumer, the Senate Majority Leader's proposal, which, although far-reaching and covers, a laundry list of elements, it's really important for people to see that these issues are now on the floor of the Senate and in the House being debated. no policy is perfect. No bill is perfect, but the makings of agreement are there. And I think what we're going to see over the next 6 to 9 months is there's going to be legislation that's going to put different elements together, because in the United States, every 2 years, there's midterm elections. So, don't get the impression that everybody likes cannabis, but they do like getting reelected. And the Democrats were elected for certain issues. And if they are seen to fail, then that's going to hurt them at the polls. So that's why we believe that ultimately something's going to happen in this session over the next 6 to 9 months that is going to embrace or reach across the aisles for both Republicans and Democrats to come to agreement.
So it's a very interesting confluence and in fact, pressure cooker kind of situation where a lot of different things can and likely to come together. But at the same time, obviously some risks still in there. But as more prominent and vocal individuals come together, you start to see the direction. I think that this is going to head in due course, to your point earlier, perhaps more when, not if. Very, very interesting indeed.
And I just wanted to add, I know we haven't got to it yet, but we call it the Alternative Health Fund because although the primary focus is cannabis, there's more to this fund that result, in this outperformance relative to, the cannabis indexes and ETFs and even the healthcare indexes. We've really put together a very strong portfolio of different elements because cannabis is, I think, symbolic of a consumer change, choice, behavioral change, where people are looking to become more proactive in their health and wellness. And that's really the driving force of this fund. So it encompasses many different areas, which again lead to, we're very proud, our Faircourt team, very proud that for 4.5 years, we've significantly outperformed some of your other neo-listed ETFs. Let's just say it like that. Shouldn't say some, all, but
competition is great,
yes.
And I stand for that devoutly in everything we do. But since you're on the topic of the fund itself, I'm a bit curious. It is obviously dubbed the Alternative Health Fund. What else other than cannabis have you been tracking, watching for, maybe thinking, things that are in it that people might not expect?
Sure. So, we talked about the reopening trade, and that's really an important theme since last year. Over the next few years, we see the healthcare industry, the broad healthcare industry, as being central to the reopening. If you think about it, last year, nobody went to visit their doctor. And we were all cooped up at home. So there were less injuries. This year, over the last 6-9 months, now that we're free again, there's more elective surgeries. There's more medical devices being sold, whether it's AccuView contact lenses or hip replacements or knee joints, spinal injuries. So it spurs a company like Johnson & Johnson to outperform estimates. Its most recent Q2 numbers beat expectations. They've raised the forecast for 2021 because everybody's more active and they're going back to hospitals and seeing their doctor. So great example, J&J. Another one is Pfizer. If any company has been able to knock it out of the park based on COVID, it's Pfizer. 40% of their Q2 revenue came from vaccine sales. 40%. 40.
Holy smokes.
And for the balance of the year, there are contracts to deliver 2.1 billion more doses. So this is a wave that Pfizer is going to ride for a considerable period of time. In addition, they have recently come out with a booster where they did phase 3 clinical trials with 100% efficacy, meaning very strong efficacy for the soon to be developed or soon to be rolled out booster shot. So Pfizer is going to be doing quite well through COVID. Now, what's interesting also is it's a pharma company. And so we're able to also look at what else do they have down the road. And they've got a pipeline of pharma products that are coming, as well as products that are already on the market, like Prevnar, which is going to be really significant after COVID because it's a respiratory related medication. So we like the pharma companies, we like medical devices. And then you come to a product everybody in Canada knows, Jameson Wellness. It's a pure play vitamins, minerals, and supplements business. And people have changed their behavior since last year. So you look at these companies that complement what we're doing on the cannabis side. So you're into pharma, you're into healthcare, you're into health and wellness. And that's really what we look at when we talk about the health and wellness sphere.
So in fact, actually living up to the name of the fund, it's not just U.S. cannabis oriented, but really the alternative health market generally and broadly covered with the holdings.
Yes.
Now, in our discussion as well, we were chatting, and I think I casually asked you at the time, what isn't in it yet? And I think one of the ones that kind of popped into the back of my mind as a question mark was around the psychedelic space and their orientation towards mental health and wellness. They're not in the fund today, but curious to get your thoughts on what you're paying attention to in that arena and how it might apply.
Yeah, we think that it's really early for the psychedelics space. There was a lot of chatter about a year ago suggesting that psychedelics were the next cannabis. And we don't really share that view because the psychedelics space has a lot more friction in its delivery. What we mean by friction is if you are a patient in the medical cannabis business, you have a card in the US that allows you to go and visit the dispensary, and you go in and you buy what you need and you leave. Very little friction. In Canada, similarly, you go to see a doctor or health practitioner and they give you a script and it gets delivered to your door. Also, no friction. Psychedelics are a little bit more challenging in that the way it's dispensed is you have to go to a clinic and you're there for several hours and you're under the watchful eye of either a doctor or nurse or nurse practitioner. So that the cost of delivery is more significant. In addition, these the psychotic and psychiatric drugs are going to go through years of clinical trials. So until those trials are brought out, typical time frame 5 to 7 years. So there's going to be a lot of waiting. In the meantime, where could we be investing that money that could be growing? And so we look at the opportunity cost and say, you know what, I'd rather wait to get to the more experienced and best teams. Because we have to remember in pharma development or biotech, it's binary. It's either going to work or it doesn't. And so far, we've decided to shy away from that.
Your commentary very much aligned with how I think some of the early into the industry have even positioned their own organizations. It's either to the moon or it's zero, and it's going to be very binary as an outcome. And to your point, as time goes by, more data, more intel, more information about the trials that may ensue, and at some stage, perhaps an opportunity. For now, wait and see. Anything else that's kind of hit? Yeah.
One other point about psychedelics that a lot of people don't click on. Psychedelics are basically one or two drugs, ketamine, psilocybin. In a cannabis plant, there's over 100 different chemical compounds that can create different types of effects, different types of drugs. So it's a much less understood, subtle element. But in cannabis, even if we're just looking at the medical side of this, the list of ailments that cannabis plants can treat is a lot greater than what we see on the psychedelics side. So just adding more to the science.
It's a very interesting point, like a wider range of capabilities, obviously open distribution both on medical and recreational now, and then obviously geographic barriers coming down seemingly on a daily basis to facilitate that. Now, I'm a bit curious, just mindful of time as we've only got a few minutes left in our conversation today, but thinking outside of the fund and NAHF right now, especially as someone who stares at a lot of data and information every day, what's another area of the market that you as a PM, as a manager, and as someone with an incredible amount of experience in this industry, what are you paying attention to? What are you looking at? What are you watching for? Just thinking about something that our audience might not be staring at today and should be.
Sure. Well, I would say people should be mindful of inflation. Although, the US Federal Reserve keeps using the word transitory, I'm not an economist, but I actually got a master's in economics. So I shouldn't say that, but I don't have a PhD. But I think that, the supply chain challenges and the reopening demand are leading to significant inflation, which is here for a significant period of time. Combined with the fact that interest rates are still historically very low, is leading to significant pressure in economies. And so how do you play that? We run a gold equities fund. That's not part of this discussion. There are many gold equity funds and ETFs. I would suggest that it's an underrepresented sector in most people's portfolios. Typically, back half of the year is when gold has a good run. And given the dynamics of what's going on in the world, there's a lot of instability. The debt to GDP ratios of many countries, including the United States, are not strong. And so as a result, we think that gold would be a good place to have a couple of bucks.
And sage words as well, especially as alternative currencies start perking folks' interest, finding something that is stable, reliable, and can kind of manage the traditional economic setup. Also a benefit. Funny story for you. I too have an economics degree, not a master's, but that's something that I don't put to work often enough. And to your point, PhD is kind of the upper level of understanding how that all comes together. Interesting thoughts, nonetheless. And maybe in parting remarks, and Charles, maybe give you last moment at the floor. Anything else we didn't manage to chat on today that you think the folks in our audience or your investors, either in the alternative health fund or otherwise, should be looking out for?
No, well, I really appreciate the opportunity to talk about the ETF because, different from a fund, the ETF gives investors daily liquidity from the day one that they invest versus a fund where there's that initial hold period. And so this is a great opportunity for people to trade exposure. I get it, that they want to be in and out, and that's okay, even though I'm a long-term investor. But this is a great opportunity to get exposure to these different healthcare and alternative health related industries, gives people a great leverage to this story that we see over the next 10, 15 years has a significant amount of growth. So thanks for letting me hear my pitch.
Absolute pleasure. And to our audience, a quick reminder, Charles is running the Ninepoint Alternative Health Fund. Ticker is NAHF. Charles, thank you very much for joining us today and for sharing your views on the world of cannabis and alternative health and where it's going, and for providing our investors a bit of a view on how they could be thinking about a number of different parts of the opportunity. I certainly appreciate your time. I know our audience does too. And we're excited to host you again for another Spotlight session soon. To our audience, this is Neo and Ninepoint signing off.